Hello to all traders and welcome back to another market review brought to you by Orbex. So it's NFP Thursday and not Friday due to the long bank holiday weekend, the 4th of July weekend. So we're having the NFP numbers one day earlier, but they are still expected to come in very, very low, roughly only 100 to 110,000 jobs forecasted. But that's on the back of last time where we saw only 139,000 jobs being added. So it is not a very good economy at the moment. And we've seen that on the FX charts. We've seen the euro dollar in particular hitting another multi-year high, popping above the 118 level. And it's not only because the dollar is having a bit of a sell-off. We're seeing ECB signals at the moment that they're coming to the end of their tightening cycle because the inflation is at 2%, whereas over in America, inflation is still quite a way away from the Fed's target, and in doing so, the Fed isn't looking likely that it's going to have any amendments to its rate policy at the moment. So quite a tale of two different stories, and we're seeing that reflected on the charts. I just want to go right back on the weekly chart, and as I said, we're popped above 118, and that hasn't been seen since September of 2021, so nearly a 4-year high at the moment. We've had very, very detrimental downturns on the pair, and obviously cracking the parity level that was at the end of 2022. But since then, well, since the beginning of the year, February, March time, we've had such a big momentous shift going from 104 to 117, added over hundreds and hundreds of pips of value to the currency pair. So let's just take a look on the 4-hour chart, see where we can have any kind of slow down. Well, the last time I checked this, we were seeing that there was a bearish divergence, well, many bearish divergences on the RSI and stochastics, but that hasn't slowed down any momentum at the moment. We're only seeing really in the real near term that we could have a bit more of a consolidation before potential move higher, but 118 now becomes the kind of support and resistance for a lot of traders. We're just testing that particular area at the moment. As you can see here, did get a little bit of a false spike at 118.30, so only 30 pips above that particular target zone, so we could see another drop lower before we get any higher. So that's the consensus from a lot of economists at the moment, especially with the bearish divergences coming into play. So where does this leave the dollar? Well, NFP numbers will show if we're going to have a bit more of a progressive second quarter as we kick off that particular period. But with the 4th of July long weekend coming into play, don't expect that there'll be many miracles at the moment. Sterling as well, if we go right back on the weekly chart, we were seeing pretty much the same picture as the euro dollar. We weren't seeing these particular levels since September, October of 2021, but since then we've had a bit more of a dive. But that was such a progressive week, excuse me, such a progressive week that we saw last week, where over 400 pips was added onto the value. So now we're just seeing a little bit like the euro dollar, if we're going to have any kind of pullback in the near term, or if price action will continue higher. Well, the NFP numbers will tell us that, probably not, but as we go into the second quarter, we'll get a bit more of a feeling of where the Fed is going to be going. So until next time, have a great trading day ahead, and bye for now.